Hi guys, welcome back to Manufacturing Accounts 2, where we're going to be looking to what we need to do as adjustments in the other final accounts. Okay, I'm going to do this up from the base. This is a sole trader. What you're more likely to see in your exams is a limited company. So where are we going and what's the theory? Well, the theory is not particularly difficult. You've got the manufacturing account from the last podcast, okay, with a cost of production of 111,000. And we're looking across here now at the income statement, and what do we do that's different? Well, the first thing we do that's different, rather than opening inventory, we put in the opening inventory of finished products. So what's being transferred, if you like, from the manufacturing side of the business to the sales side of the business at the end of the previous year, start of the current financial year that we're doing the accounts for. And we then just add on the cost of production to the opening inventory. So that will give us a sort of running total in the same way that we do for a normal income statement. And then all we need to do from there is, and you won't be surprised by this, but we less the closing finished goods. And the reason why we do that, again, it links into this matching concept. This £20,000 worth of opening inventory of finished goods would have been part of this year's revenue or sales, and the $18,000 worth of finished goods at the end of the year, they haven't yet been sold, and therefore they shouldn't be matched with this year's sales. They're going to be matched with next year's sales. Gross profit for this business is 190,000, and I've got to be honest, everything from there on in is exactly the same as you guys are used to already. Just remember not to put, if you're asked to do a full set of accounts, anything to do with the manufacturing business in the expenses in the income statement, because you'll lose your of marks for profit for the year, in the same way that you will lose of marks over here in the manufacturing account if you put anything in that should be part of the expenses of the admin and selling side of the business. The only other thing we need to look at and be aware of, there's a slight change as well to the statement of financial position, and it is only a really slight change. So everything else in the statement of financial position is exactly the same as you would always see for whatever type of business it is, whether it's a partnership, sole trader, or limited company. And this one's done for a sole trader, but the inventory is different. With the inventory, we will list all three types of inventory that this business has at the end of the year. So they've got raw materials of $9,000, they've got work in progress of $4,000, and finished goods of $18,000, and therefore the total value of the inventory is $31,000. Okay, and then down here, just be aware, more often than not in an exam, rather than this is a capital section, obviously for a sole trader, you're more likely to get the capital section for a limited company. Right, there's a student question for you to do, which is actually to do exactly what we've done here, which is to do a manufacturing account, transfer the information over to an income statement, and then to complete the statement of financial position. And don't forget to sign off the check sheet to make sure, or let me know if you think you understand and are able to do everything or not, because that allows me to set the right questions and things for you to do in the class. Hope that was useful, and I'll see you all very soon. Bye-bye.